Good morning or good afternoon. How's everybody doing? Bear with me just a sec here. I'm getting things around. Let me know if you can, that you can hear me. Make sure I haven't kept myself muted. Awesome. Thank you, Kevin. Looks like you guys can hear me. That's good. Doing a little some technical stuff. Always seems to be when it pops up right when you're about to start. It's like, so, but it is what it is. So, are you having a good week so far? It's been well, the last 3 days have been crazy. It was choppy before the last couple days ago, but which is the topic of today, which is where it came from. So you get this phone turned off real quick. Please turn down. Go on here. There we go. Okay. Should be good. Just found out this morning a friend got in an accident yesterday. So trying to find out what the status is. So anyway, welcome to Trading Coaches Playbook. Let's get the disclaimer part out of the way. I'm not a registered broker, investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we don't discuss funded trading here. So here's all the upcoming workshops, web shops that we have. Trade Watch Alerts Q&A. That was yesterday. So if you're in Trade Watch Alerts, then the recording should be up. I'm not sure when they get that up exactly, but I would imagine it's fairly quickly. It might be up already. I'm not 100% certain. So Inner Circle check-in is September 16th at 7 p.m. Eastern time. And then I guess we don't know if that's Eastern time. It doesn't say it is. The monthly is September 26th at 8 o'clock, definitely Eastern time. But Trading You is September 16th and 25th. And then Mastermind Group is September 17th and the 24th. You notice almost everything we have is 8 o'clock Eastern time. Seems to be the best time for most things, especially for coffee. You know, it's not 8 o'clock Eastern time. So free online workshops, you got Power Hour every Monday with Rob, and then Trading Coaches Playbook every Friday. This one, Hidden Gems in the Chart. Another one coming up on September 19th. Next, what is that? Wednesday, I think, isn't it? With yours truly. The Power Option Plays is there we go. I wonder what happened to that. Monday and Thursday. Cover Call Explorer with Trip on Thursdays, and then E-Mini Think Tank with Brandon Monday, Wednesday, and Thursday. So that is what we have. Curious how the Trade Watch Alerts trades are going. They're going good right now. Actually, one's halfway out, one's 80% out, and just waiting for the other part of them to trigger, hopefully. So yeah, two for three today. Actually, the third one didn't even hit. It went the opposite we thought. So we got two trades on, both are profitable so far. So that's always good. Always good. It's better than the having losers, which they're not bad either. As long as you had a plan and you stuck to the plan, losing is no big deal. It's like striking out, right? You go up to the plate, swing the bat. If you strike out, so be it. Wait for the next at bat, and you might get a home run. You can find us here on all the social media platforms. Hello, Brenda. Thank you, Andrew. I just noticed he put the Hidden Gems link is in the chat there if you want to sign up for that. So, and then if we haven't met, if you're not familiar with myself and my style, I have Patterns of Flash. That was the first one I created. Man, that's been 15 years ago now. It's all technical analysis, all about patterns. So I was dubbed the Pattern Whisperer, which was flattering and humbling and interesting. But that's the one thing I fell in love with first when I started 25 years ago was patterns, technical analysis, and then I got into patterns more. And the more I used them, the more I saw the power behind them, because we all want consistent, repetitive things, right? And we all live with patterns, right? when you get ready for work, if you go to work, even if you don't, you have routines, right? You get in these daily habitual patterns. Stocks are no different. They get into patterns and they develop patterns. And once you learn to see those patterns, the ones that are consistent and repetitive, and they behave similarly most of the time, then obviously we could profit from that. So it's learning to recognize them that is the challenging part, which is what I ran into. I started reading books because back in 2000, you had books, you had live workshops. That was it. We didn't have the ability to do this. So I created flashcards for myself to train my eyes to see the patterns, which is essentially what that is, patterns in a flashcards, right? So, but then there's 6 or 8 hours of training, on-demand video training about how to use the patterns, how to read charts, just basic technical analysis. And also there's a lot of advanced stuff in there too. So best thing you can do, in my opinion, is go get the trial. You have a 2-week trial when you subscribe to it and take the quizzes. There's 4 different quizzes in there about each 4 different educational section. Take the quizzes. If you ace them, you may not need it. Cancel it. If you don't ace all the quizzes, you might need something that's in there. So Weekly Whispers, we launched at the beginning of last year. I do my research every Thursday night. I go looking for candidates. I go look for patterns. I don't have a basket of stocks I watch. I look for patterns. So I have one watch list that usually has about 300 stocks. I flip through it real quick, look for patterns. I drill down, filter them down, and find the best of the best ones. Usually I have about 20 or 30 candidates every single week. I think I had 22 or 23 this week. And then that's all I trade for the week. I set up trading plans. I analyze them. I draw the lines, draw my trading plans. You're going to see some of that today. I draw the plans on the chart, and then that's all I watch for the week. I don't go hunting every day. It takes 2 to 4 hours to do that research and set up the plans and get it all done. And the patterns don't typically change a whole lot anyway. So not from day to day. Week to week, they can. We still have a lot of, we watch sometimes for 2, 3, 4, 5 weeks in a row. We'll keep the same patterns. If they're developing, we'll watch them until they either break or the setup disappears. So, and again, you'll see, I just did my research last night. So we'll get into some of that today. You'll see, you'll get a little snippet of that. But every Thursday night I do a recording. It's usually about an hour, give or take a little bit, depending on how many squirrels I find, right? But I talk about the macro view, what I see, the big economic picture, which that's something we'll talk about today too. But and then we look at last week's review, what happened with last week's stuff, any lessons we may have learned, and then look at this week's candidates. And then if I have time, if I haven't gone too long, and there's something that if it's relevant, then we'll go look at some options. There's any candidates that we might like which option to trade. So, and then small accounts, big return. That's a pre-recorded class I did, a couple of years ago. If you're working with a small amount of capital, how can you adjust and adapt so that you can grow that account into obviously a bigger account? Because that's what you're all here for, right? Of course, there's that old saying, how do you make $1 million in the market? Start with 10, right? Excuse me. So if you haven't figured it out yet, trading is not exactly easy. It is a challenging business. So if you've been led to believe that this is going to be a cakewalk, then you have been misled. So it is there's a lot to it. It's not as complicated as we make it, though. That's the interesting part. And we all pretty much, I think everybody falls into the trap at one point or another. I did too. Thinking that it's more complicated than it is. It's really not as bad as you make it sound, or as bad as we make it sound. It is, there's the drinking from the fire hydrant analogy, and there is a lot of information, but once you understand the basic, the surface level stuff, and then you start getting deeper and you start getting to the roots, if you will, you'll recognize that most of that stuff that you learn on the surface up here isn't really that relevant. The reality is, once you get to the roots and you understand some basic concepts and how to do it, certain things in certain ways, then the rest of it kind of goes away. I can't tell you how much stuff I've forgotten. I mean, I read, I don't know how many dozens, probably hundreds of books. And the vast majority of what I read, I don't ever use. I've forgotten it because I don't use it. And you don't need it, right? You need some core concepts, some core main things. That's it. And I'll touch on 2 of those today that I think are the most important. But what do you think? Are we in a Bull market or bear market? How can you tell, right? And really, the answer to that question is depends on who you're talking to. There is no right or wrong answer to that because we all trade a little different, right? Some of you might, people day trade, they're in and out the same day. So, it might be a bull market for a day. Right now, as of today, if you're looking at intraday, we're in a bull market. That's awesome, Steve. Is there a squirrel market? That's my market every day. I find squirrels everywhere. It's my ADD. If you didn't notice already, some of you already know this about me. But yeah, actually, that's a good analogy. I like it because this market is kind of like a squirrel, like Uber, right? Uber came out and announced this morning, which I noticed because I'm going to trade on it, right? And it was looking absolutely beautiful. Things are good. I'm profitable. I was up. Everything about it's bearish. Chart's bearish. I'm in a bearish trade. And they come out and announce that Austin and Atlanta, they're opening up is it Waymo or something like that? Whatever software it is, the self-driving software. They're opening up those cities apparently so that you can pick up an anonymous or autonomous, not anonymous. So I guess the same thing, kind of an autonomous Uber. So that technology is growing, and Uber is obviously going to take advantage of that because if they don't have to pay a driver, that's all profit for them then, right? They just have to have the cars. So that's an interesting market. But the thing gapped up 4 points this morning based on something that is, I don't even know if they're monetizing it right now or not. I don't know if they're making money off that, if that's actually in play right now. I haven't done the research. Doesn't really matter to me. But I thought that was something that we had in the future. It's not big if it is. So, but the market gets excited and often will overdo it. It's not uncommon for the market to overdo it either way, right? To go from one extreme to the other. So the market gets irrational exuberance, right, as Greenspan coined. And then the market will also panic when things get really bad. And one of the keys to trading, especially if you're buying or longer term or selling, whatever you're doing, longer term picture is when the market gets overheated and people get all excited and the market's going to the moon, that's usually a sign that the end is here. When everybody's panicking, there's blood in the streets and people are freaking out, it's never going to come back. This market's going to fall forever. That is when the bottom gets put in. So those are your long-term buy and sell opportunities. If you're a long-term investor, if you want to buy stock on the cheap and you want to hold on to it for several years and see it go up, wait till there's blood in the streets. If you don't pay attention to Buffett, I don't necessarily pay attention, but there's headlines all the time. And sometimes it's not something I follow on a regular basis, but headlines come up and you see stuff, all over the internet that Buffett is selling a lot right now. He sold half his Apple stake. He sold a huge part of his Bank of America stake. He is going heavily into cash, which should be a clue. So it's one of those things that when the market is overheated, and is it overheated right now? In my opinion, it is, right? I think that we're not in a bullish market. We're not in a bearish market either. I think we're going to be in a chop for a while. I've been saying that I'm a bear market. I'm a bear long-term just because of all the underlying economic issues that are going on. There's so many undercurrents that we can't see on the surface, or at least most people can't see on the surface, but it's going on below the surface. And it feels like a house of cards. One little thing happens, just like, what started 08? Lehman Brothers. I just saw a documentary a couple weeks ago about that, how that was an intentional, what was his name? Hank Paulson, intentionally allowed Lehman to collapse instead of stepping in. He could have saved him, but he chose not to. And that started the crash of 08. That was the first thing that happened where this giant bank collapses and everybody panicked and freaked out. But then that exposed the reality of what was going on below the surface. So it was really interesting. That was just, a couple weeks ago. I just remembered that, where he could have stepped in and given a short-term loan from the government to the bank and allow other banks to come in and buy off the pieces of it and salvage it. But it sounds like he had a grudge against him. He used to be with Goldman, I think it was, or something like that. He was with the competitor, and so he hated Lehman, so he wanted him to go under. So it sounds like that was a human error that allowed things to collapse. So I just noticed you guys put a bunch of questions there. Does the driver cost more than extra insurance? Good question. I don't know. Yeah, it'd be interesting to see that whole model and how it works. You know, if you're not paying somebody to sit there and drive the car, what other is there additional insurance they have to pay? I would imagine, because I mean, I wouldn't trust a self-driving car myself, but not at this point. I guess maybe I haven't seen them, but I've had guys tell me that they have Teslas, and they're like, yeah, I go all the way up to one guy's. He commuted all the way to Everett he worked at Boeing or something like that. He commuted up there, and he goes, I've gone days without even touching the wheel. And to me, it's like, whoa, it's crazy. But I haven't experienced it yet either. But I don't trust technology that much. I don't have that much faith in it. So, yeah, trade Uber, don't ride in it. I've taken Uber a few times, places. When I went to Montana a few weeks ago, I did. So I had to Uber back and forth. But it was a little town, so I mean, they were like $10 rides. I did Uber from South Seattle one time. This is like 5 or 6 years ago. I had to have my car worked on. I took it to the guy I know that has a shop, and I Ubered home. It was $130. And I was like, what? I figured it'd be $50 or $60. It's like, whoops. And that, like I said, that was 5 or 6 or 7 years ago. It's probably double that now. Actually, it's 180 to go to the airport. My neighbor told me that. So I'm trying to. Okay, Brenda, I didn't see that until now. Oh, Buffett. You must be referring to Buffett. He has enough. He had enough 40 years ago. At that point, it's not even about. It's not even about the money. If you know people that are super wealthy, I mean, I know a couple of people are worth 9 figures, 100 million plus, and you get to that level, and it's not even about the money anymore. It's just a scorecard, because you get to that level, you're living comfortably. You don't. All your needs are met financially. You can have just about anything you want. So it's not even about the money at that point for most people. So, oh, really, Steve? That's interesting. Said I know. He says I know several people who had Teslas who said they never use it again after they did squirrely things. Yeah, I don't trust technology that much. I mean, Google Maps can't even get me to the right location sometimes. It can't even figure out which route to put me on sometimes. It's just, and so yeah, that I guess that's why I'm so skeptical. It's like, no, I'm not going to trust a car to do that. Um, oh, I got you, Karen. Okay. You went the driverless ones, the carless ones. It's like, wait a minute, what carless one? How do you have a carless Uber? Person driver, the driverless one. Yeah, I wouldn't get into one of those either, unless I'm going down the block or something like that, and I'm only going to be on side streets where if it crashes, I'm not going to get injured. So one of the things about short-term trading, one of the benefits to it is that in choppy markets like this, in markets that don't really have much of a direction, where we're not in a trend necessarily one direction or the other, even though we kind of are. In the last year and a half, the market has been mostly bullish, kind of. Depends on how you define that. And that's what's so goofy about it. A lot of people, oh, we're in a bull market. We're in a bull market. You guys are missing the bull market. Are we, though? Or is that just a handful of stocks or a small percentage of stocks, the big boys, the big aircraft carriers out in the ocean that are doing well because they have deep pockets? They have lots of cash. And they have lots of customers that continue to pay them, right? So they're not hurting as bad as some of the others. So the question is of breadth. How broad is the bull market? and it's decent, but it is, in a lot of ways, it is a handful of companies that, what is it, 27 or 37% of the SPX is made up by the Magnificent Seven. So you got a huge percentage. I think it's the biggest number ever. It's a huge percentage of the market is made up of a very tiny, tiny percentage. Well, that's not even 1%, is it? I mean, there's 500 stocks in the S&P 500. And there's 7 stocks that make up more than 25% of it. It's either 27 or 37. I don't remember. So you got 7 out of 500. If all 7 of those are doing well, which most of them were, they're starting to slow down a little bit, then what happens to the market? Because there's a lot of stock. Go look at Etsy. Go look at that's on fresh on my mind because it was on the list this week, and it's been in a downtrend for 2-3 years. Peloton's another one that I haven't looked at because it's last I heard of it, saw it on CNBC a few weeks ago. It was at $3 or something. Like I traded it. I traded the downside when it was at 175 when it had a beautiful head and shoulders, and it was like, this makes no sense anyway. $175 for a company that sells bikes. It's just insane. So anyway, that was a nice one. I like that one. That's why it's in my mind. You have those trades, right? You have those home runs that you remember. But macro analysis, the big picture, obviously can help to determine the longer-term trend. But the market and the macro data can stay disconnected for a very long time. And it feels like to me that's where we're at right now. The macro data is not really that good. Some of it is, but a lot of it's not. And the direction a lot of it's headed is not good. Inflation is still too high. And it's basically flatlined. It's not continuing to trend down, but it's flatlined. And there are some that think it's going to tick back up, some that think it's going to continue lower. I think it's going to stay pretty stagnant myself, but we don't know, right? I mean, you have CPI and PPI came out last couple of days. The month-over-month number ticked up by 1/10. Everything else was in line with expectations. But yeah, inflation's not likely done. And the Fed's going to cut rates. Will that kick inflation back in? Probably not. But who knows? In China, they're experiencing deflation, which that's not good either. I saw this a week or two ago where people in China are taking pay cuts. Their salaries, their wages are down 10% because people would rather have some money, some income than no income. So they're taking pay cuts. They're taking other jobs for less money. Because like I say, you could either adapt your lifestyle and take less money or take nothing and be broke. So, and I wouldn't be surprised if that happens here. I think wages have gone too far too fast. It's just like a stock, right? If it goes too far too fast to the upside, there's probably going to be a pullback or a revert back to the mean, right? So we've got to look at reality. Unemployment is starting to tick up a little bit. Hopefully I got that muted in time. I got a little mute button here on my mic. I still got. Oops, I just flicked it. Am I coming through? Okay, good. Still got this cough that's kind of lingering. It was gone mostly, but then there's the old bearish mantra, right? The very bottom there. The market stay bullish longer, you can stay liquid. Right. So if you're a bear, which I'm a bear, long term, I'm a bear. I think this market is overheated. I think the economy has a lot of problems with it. The debt is crazy. The deficit is out of control. So interesting. I just saw an article this morning that some guy that's been with Buffett with Berkshire Hathaway since 1986, I think it was. He sold 55% of his stake of what he owned. He still has 62 shares personally. 62 shares. He sold something like 70 or 72 shares. I think it was 70 shares. It was $139 million. But Buffett's stock is at what, $650,000 a share or something like that. So if you have 10 shares, you got $6 million. All right, whatever it is. It's crazy. But Buffett doesn't do stock splits. If you took some of these other stocks, Microsoft and the other, and you took away the stock splits, they'd probably be, I wouldn't be surprised if they were there. It'd be interesting to see what they would be at. But yeah, Buffett didn't believe in stock splits, but he did split the B shares. But how do we manage trades in a choppy market? Well, you have several options, right? You can take your profits sooner, get in and out quicker. So, instead of, going for 50%, you might go for 30%, whatever your target is, depending on how you trade, right? But then the question becomes, what if it keeps going? What if the thing keeps on running and you leave profit on the table? Anybody ever have that happen? And you get cranky? You're like, I should have held on. It's going to happen all the time, so get used to it. If you're new to trading, it's going to happen all the time. Even when you implement strategies to have it not happen or have it less impactful. Scalping, yeah, scalping's tough, but I guess it depends on how you define scalping. In the old days, scalping was, well, when I started, scalping was getting, an eighth or a teeny. Y'all probably haven't been around long enough to remember that, huh? But when I started, the market was trading in fractions still, and I had to go memorize all these fractions. Right? You had a quarter, you had an eighth, a 16th, which is called a teeny, a 16th, a teeny. There was a 32nd. I can't remember what that was called, but that wasn't very common. But most things traded in eighths or quarters. Those are the spreads. Now we have penny, a nickel spread. Some of y'all are freaking out like, oh my gosh, a nickel spread! Holy cow! That used to be more than standard. An eighth was, well, a quarter is 25. An eighth is 12.5 cents. Right. And then commissions were super spendy. I mean, the cheapest I could find when I started was $75 per trade. That was for one contract. And then it was $5 a contract after that or something like that. It was insanely expensive. It was insanely expensive to trade back in the old days. That is why back in the 70s and 80s, the buy and hold thing was the way you invested in the market. You didn't trade. Unless you had millions and millions and millions of dollars, you didn't trade the market. It was too expensive. That's where mutual funds and these index funds, that's where they all came from. Because the average Joe couldn't get into the market because of the expense to actually invest, just to get in. So you couldn't get in and just get in and get out like we can today. It was so expensive, you might pay, it used to be a percentage, right? You pay 3%. So if you give a broker 50 grand, so you go buy me $50,000 of this stock, your commission was $1,500. That stock, if you're buying a $50 stock, that stock's got to go to 51.50 just to break even. Except it doesn't, because then you're going to pay 3% on that. It actually would have to go to 53, but actually it has to go 3% above that. It has to go to basically 54,000. So it has to go up about $4,000 for you to make any money. So the stock's got to run 6 to 7% just to get to break even, because you got 3% in, 3% out. That's 6% just to get break even. But 3% on a heightened value is even more. So it goes up gradually, right? So you got to make 6.5 to 7% just to get break even. So if you weren't getting a 20, 40, 50, 100% return, it didn't make sense to trade back in the old days. So nowadays, and that's what anytime people ask about commissions, it's like, but then again, they don't have the perspective I do either, because they weren't in that place where, you get in a $75 trade, you start with $1,000, $75 in, $75 out. That gets expensive quick. It changes your trading. Nowadays, I mean, like Jennifer says, scalping. If you got to pay a little commission, the commissions are minimal. They're almost nothing now. So it is, from an expense perspective, today it's so much easier and better to get started trading than it used to be. You can do it with a much smaller amount of money, and you can get in and out much easier, right? Okay, yeah, that's essentially scalping, yeah. But yeah, people define things differently, so it's always good to make sure we're on the same page. In and out in minutes. And you're looking for just fractions of pennies or fractions of pennies, depending on how big you're trading, right? You can put tighter stops on it, which that has its risk too, right? If you put a tight stop on it, you get wiggled out too much. You get stopped out, and then it turns and goes the opposite direction, goes exactly what you thought it would. And that's irritating, right? Because you take a loss, and had you held on, you would have made a profit. But how do we know, right? Or you can sit on the sidelines. I mean, these are kind of like the three baseline options that you can utilize in a choppy market. Get greedy, Brenda. Inside joke. But here's some other ideas that you might want to employ, especially the second one. But you can manage your risk reward better, right? The biggest thing you can do for that is scaling. So anyway, so what do you mean scaling? Well, get in or out in chunks. And if you haven't ever scaled in, do it. It will blow your mind. Here's what I mean. Okay, scaling out is where I started. I learned about that, and then, so you go buy 10 contracts of an option, right? Or 1,000 shares of stock, or 100 shares, whatever it is, whatever the number is, doesn't matter. Let's just say you buy 10 contracts of an option. It moves up in your favor. You're up $2,000. You're like, woo! And your target's to be up to make 10. The next day, what happens? Stock comes out with news, like Uber, right? And it goes against you. Uber went up. I wanted to go down. That profit I had, like yesterday, I was profitable on Uber. Today, I'm upside down because of news that was unexpected. Had I known or expected or thought that that was possible, I would have scaled out and taken some of my profit yesterday. It wasn't really big enough to justify doing that. Plus, the news wasn't expected, right? But you're up $2,000 and you're worried. And you're like, what if it goes away? Because you've had that happen, right? If you haven't had it happen, you probably will. You're up $2,000. You wake up the next day and something happens. Things move the opposite direction. You went from up $2,000 to down $1,000. You're like, now you're freaking out. And you don't like that. It's a terrible feeling, right? It's like the roller coaster ride, right? You're going up to the top and then woo, not fun. So how do you avoid that? Well, one option is to scale, right? If you take off 2 or 3 or 4 contracts or 5 contracts or however many there are, whatever makes sense. And when I say whatever makes sense, is mine is all based on the analysis of the chart. The chart on Uber looks beautiful for a bearish trade. It is headed south. The volume is accelerating. Everything about it says this thing's going down. There was no reason for me to take anything off the table yesterday. But if there is, or if you're just nervous, which I wasn't, because even today, I'm not upside down enough to, it doesn't really hurt that much. So, I mean, it's never fun, but it's not a big enough loss to worry about. But if you get to a place where you're worried about your profit and you don't want to give it back, then scale out, take some of it off the table. The other thing that people have a bigger challenge with is scaling into something. Because when I started, all my coaches it was 10 contracts, 10 in, 10 out, 10 in, 10 out. I'm in, I'm out, 10, 10, 10, 10, always 10. And over time, as I traded more and more, I'm like, why am I doing this? And there was actually one moment in time that really shifted my mind. And if you've been trading for a while, you probably have experienced this where you learn something new and you go, oh, I should do this. Excuse me. It was Baidu. I think it was 2005, 2006. Wasn't a very old company. And had a nice looking pattern. Had a beautiful breakout of 80 in the morning. First thing in the morning. It gapped up through it, which was an all-time high. It was at a resistance, all-time high. And I'm like, and it pulls back. It's about to do a roll reversal intraday, like 2 hours into the market. I'm like, that's beautiful. It's a perfect setup. I'd only been trading 4 or 5 years. And fear got a hold of me. And I'm like, because I'm 10 in, 10 out. 10 in, 10 out. And for my account size at that time, buying 10 contracts of these calls was a huge chunk of my account. And I gave in a fear. I didn't do the trade. I thought I'll come back and look at it in a couple hours. Came back and looked at it in a couple hours, and it had already rallied 2 or 3 or 4 points off of the $80 level, the old resistance. Like, oh, I missed it. So I'm cranky, right? 4 days later, and of course I'm watching this thing. 4 days later, it hits $120. This thing literally ran 50% in 4 days. I think the options were $4 or $6 or $8. I don't remember exactly. I want to say they were 4. 4 days later, they were 24. They were up $20. It was like a 500% rate of return, something like that. That's what I remember approximately. And I wasn't on that ride. A little $4,000 trade could have turned into 24, 25,000. And I remember kicking myself. I'm like, what if I would have just had one contract? Because I didn't have a huge account at the time. What if I just had one contract? That 400 or whatever it was would have been 2,000 or 2,500. I still would have made the same percentage rate of return. I'm thinking, why didn't I just do one? Because I was scared. I didn't do any. I sat on the sidelines because that's what I learned is if you're not comfortable with a trade or if you don't like it, just don't trade it, which isn't a bad thing, right? There's the old pilot mantra. It's better to be on the ground wishing you were in the air than in the air wishing you were on the ground, right? So it's not a bad thing to stay out. Sometimes the trade is to not trade. But if you have that fear factor coming into play and you're going, I don't know, there's nothing wrong with buying just one contract. I certainly wish I would have done it on a Baidu. I still do it today. So the amount of contracts, the position size, and that's where I put that here, position size. The position size that I put into place, that I employ, is all based on the analysis of the chart. If it's a really good looking chart, if it looks really bullish or really bearish, and I think it's going to make a big move, then I might go a full 10, 20, 50 contracts. Just depends on what it is, right? If I'm looking at it going, I'm not sure if this is really, I'm kind of nervous. And my mind always goes back to that Baidu trade. Like, remember that Baidu trade? Remember that missed one you had? Well, okay, let's just buy one contract. And then if it moves big, hey, at least I didn't miss it. And then I tell you what's going to happen is you're going to be like, I only bought one. I should have bought 100, right? It's keeping this straight. That's the hard part. But that's the thing. That's what happens. But it's better to be in there with a little bit than with nothing if you think it's going to move, right? So scaling and position sizing, which kind of goes hand in hand, right? They're a little bit different, but at the same time, they're attached to the hip. You should adjust the position size you have based on not only your analysis of the chart, but your comfort level. It's one thing I've been harping on the last several weeks is the question you should always ask before you pull the trigger on a trade is, am I comfortable with the risk I'm taking? And if you can't say yes, then you either shouldn't be in a trade or you need to adjust it. I'm doing 10 contracts. I could lose $4,000. Am I comfortable losing giving the market $4,000 to find out if I can make 20? No, I'm not comfortable with 4,000. Okay, well, how much are you comfortable with? I'm willing to risk 2,000. Okay, then cut the size in half. You've done your analysis. Here's what the chart says. Here's what you think it's going to do. Adjust the position size based on your comfort level. And if 2,000, you say 2,000 is too much at this point, I'm not really confident that it's going to move, then adjust it down to 500 and cut out 75% of that. Say, okay, I'm going to do 2 contracts here. And then if it moves more, then I'll add the other 3 contracts in at this point. Because then you're already profitable and that reduces your risk as well. Make sense? Actually, let's go pull up some charts because that'll probably help visually with where you're at. This thing's not streaming. Why not? All right, let's see where that's at. That may have gotten stopped out. Nope, it did not. Where's Micron? These are the 2 trade watch alerts I did this morning. Micron, no, they're both still in there, but Micron took half of it out, waiting to see if the other half hits. And well, there's a perfect example of it, actually. Let me show you. I can't show you exactly, but so here's what I did. And these are the, so Micron, this was this morning. And let me see if I have that here. Picture that. Yeah, so here is whoops, not what I wanted. This is just a little notepad I used to put all my notes on. So this is what you get with Trade Watch alerts. I do the futures in the morning, then econ data that's coming out. If we know the data, like yesterday PPI, I'll put that on here. So ASTS, let's start with micro. So micro's right here, right? You don't see that, right? Okay, good. There's a note. So put hammer and doji. That's supposed to be doji, not dojo. Whoops. If you got the Trade Watch alerts this morning, hopefully you realized that was an error. It's not a dojo, it's a doji. Bullish above yesterday's high at 88.03. Okay, we'll look for retracement if it gaps open. So there's what I just put it on today. That's today's candle. If we take that off, so this is what I'm looking at, right? We've got a double bottom. We got a nice little support here at 86. So I was looking at if it busts above 88.03, then I'd be bullish on it. And that's exactly what it did. So this top here is the 5-minute chart. It gapped right up to 88, basically, and then took off and ran. I was like, I usually don't get in on the first candle. I usually give it a few minutes to settle down and chill out. Especially if it gaps and runs like that. It'll typically pull back a little bit. Not always. Sometimes they take off. And that happened. One happened earlier this week. It took off and just ran. It was like, okay. Missed it. WSC, right? Woulda, shoulda, coulda. I would have pulled the trigger right in the opening had I known. But here's the interesting part is that if you pull the trigger right at the open, even though it runs like this, because the volatility is so high in the first few minutes, that you still might not even be profitable. And if you do, it might not be that much. So it's better to wait for it to settle down most of the time. So I waited for the next candle. I was like, I'm going to wait a little bit longer. Waited for this one. May have missed it. And then it pulled back here. And right in this area, it was a 647, 947 Eastern. Ended up buying some calls on it. I threw an order out there above the market. I think they were paid 935. I put an order out for half of it at 1030 and the other half at 1150. And I think it was right there on that one. Let's see. 7.8. Oh no, it was 10:05 actually. So right there, let me grab the pin here. So I got in on this candle when it settled in. And then the order for 1030, so it was 935, paid for it right there, right? $9.35. And then right here on this candle is where the order for 1030 triggered. It's not easy drawing with the mouse. So that's 95 cents on 5. That's $450 of profit. Banked $450. Now, if it turns over and drops off, then it's okay. I've got a lot of cushion here. Could actually this thing could probably drop all the way back to here before I'd be in a losing position. That's one of the benefits to scaling because let's see. Yeah, I've got $310 open profit right now, but $1,150 of profit total. So it's got to drop what's $1,150 divided by 5? Well, let's see, what's it at? I'll keep looking. Oh, it's at 10. So it's at 10 right now. The option is sitting about $10 right now. I paid $9.35 for them. But I've banked 95 cents of profit, call it $1 profit. So my cost basis on the other half is realistically about $8.30. So the option's got to drop $2.70. $2.10. Thank you. Close. The option's got to drop $2 before I get into a losing position. And I think the delta on it was 70 or 80, somewhere in there. So realistically, that means it could drop all the way to about 87 before I'm taking in that loss. This is one of the beauties of scaling because now I can sit here. I'm not too worried about this at all. I've got a $450 profit locked in. I'm sitting on another 75 cents of profit at this moment in time. If it runs up and hits 11, I originally put it in 1150. And then somewhere around here, it started to stall. When it was stalling out here, I went, you know what? I'm going to move it down to $11. If it runs up and tags 11, I'd be happy with that. If not, I'm just going to let it go for a little bit and we'll see, probably watch it into the close and see what happens. And if it starts to sell off, what I might do is adjust and just put a trailer. We'll see what this does in the next hour or two. But if it just keeps going sideways, I might just put a stop down here. I might cancel the order that's up here. So I'm going to put a stop in right there. And if it comes down and hits it, then it gets me out. I'm still going to have a profit, even if it gets me out right there. So there's one of the beauties of scaling. Just an example, a real-time example that we're doing right now. Whoops, where did that thing go? There it is. Try to delete that. So yeah, when it comes to scaling, it's one of the beauties of it. This is the other one too. This is the other one that we did. This one, ASTS. In fact, I'm going to get rid of. Let me delete that first. So this thing is a crazy stock. It was $2 just a few months ago, like at the end of May. It went up and hit 38. Huge move. This is earnings. It's the Space Mobile. So a lot of excitement and energy around this. It's something to do with, I don't know exactly what it is, which I don't really care. Give me a chart and give me a ticker symbol. That's all that matters. So we got a bullish move, huge bullish move here for 3 days, tons of volume. That's something to do with earnings and what they're doing, what the future looks like. Obviously, people are excited about it. So it has this nice pullback, comes back to the previous high, pretty close. Hammer pattern yesterday. There's exactly what's happening today, which is not a huge surprise considering the rest of the market is pretty bullish. Except Amazon and Nvidia have turned back over. But there's my notes this morning. So the Trade Watch alert saying huge hammer with decent volume, bullish on a break above 27.73, which you can see it hit in the first candle or the second candle. We had the doji, right? The first candle was just opened up and kind of danced around for a minute, and then it took off on the second candle, which it went from 26.78 to 28.20. That's $1.50 on a $25 stock. That's a massive run for 5 minutes, right? That's huge. Which you can see it's a volatile stock. It's got a lot of potential. Cell phones via satellites rather than towers. Okay, that's what I figured they were. You just said it beautifully where I couldn't get it in my head. I think, and that's what, it's not SpaceX. Is that somehow connected to Elon? I don't know. Either way, but I know that's what they're doing. And when he partnered up with T-Mobile went crazy. So, but the potential for this momentum to continue is pretty solid. So that's what I was looking at and ended up pulling the trigger on it here after it pulled back a little bit. I'm looking at this going, it's pulling back. The volume's a little bit lighter. I'm watching it as it's going. So I ended up picking up some, I think, 25s. Oh, wait a minute. You know what? I just realized I think I put notes on there. Yep. Actually, I'll use that one because it's got everything there. So this is the one for Monday. I always go and I'll save it, and then as I'm doing the trades, I'll make notes on it. So here's my notes on Micron. Of course, it doesn't have my original notes. That's why I didn't want to start with this. But here's the ASTS, the notes I've made so far. Doji in the first candle, followed by a big bull, waiting for a pullback. These will come out Monday. So you're getting a preview. If you already have Trade Watch alerts, you'll see these Monday. If you don't have Trade Watch alerts, this is what you would see Monday if you did have Trade Watch alerts. Waiting for a pullback. Bought the October 20s at 9:45, at 9:49 a.m., which is 6:49. Yeah, it was at the beginning of this candle right here. I put a sell to close for 8 of the contracts. About 10 contracts, right? 8 of them, 80% at 10.50. It filled at 10.32. So right there. This is the first time I've done one of these on the Trade Watch alerts, right? So we got in right there on this candle, and at 10.32, I think it's this one of these two candles right here. So paid $9.45 for them. Sold 8 of them for $10.50. So that's $1.05. Call it $1. That's $800 of profit. I've locked in $800 of profit. And well, let's see. 10 contracts is $9,450. I made $8,050. So realistically, only have what's that, 12 or $1,500 left on the table. I mean, it's not much. So It's I almost don't even care what happens with this. I mean, literally, it could go almost to zero, and I wouldn't even take that big of a hit. Right? Yeah. Well, if we got 8,000, yeah, it's 1,400 bucks of risk total left on the table. Is that right? Two contracts. So what is I mean, our cost basis is basically $1.50 a contract. So, like I said, it has to go almost to zero. But all I did then is put in a stop. I put in a stop right here, and then I adjusted it up. I think I've got it sitting at 29.75 right now. So right about there. So if this thing rolls over and it hits this level, it's just a contingent order that says if the stock hits 29.75, sell those two contracts for whatever the market's at. It's going to be profitable no matter what. So, and then if this thing keeps going, then it's going to keep climbing in price. I'm going to keep making more and more profit. So this is the beauty of scaling, right? And part of the reason for this, why I did 8 instead of just 5, because most of them I've just done 5. I do half. I take half, about 10%. Then I'll put the other half at either 20 or 30%, depending on the volatility of the stock. Sometimes if it's a smaller stock and it's not real volatile, I might just put all of it at 10% or 15%, the profit target. Sometimes they hit in minutes. Sometimes it takes all day for them to hit. Sometimes I stop out, like Chevron yesterday. I stopped out with break even basically, and an hour and a half later it would have hit the target. It turned around and started going back up. I'm like, but it is what it is. That's the way trading works. You step into the batter's box, you watch a pitch go by, you're like, I should have swung at that one. Then the next one comes and you swing at it and you miss. Then the third one comes and it's like, you just watch it. Then you strike out. Welcome to trading, right? The goal, especially with a highly volatile stock like this, is get more of it off the table because it could turn very quickly and go fast against me. But it also could run and take off. So, I mean, you can see these three big giant days. I mean, this thing went from, that's 20 almost to 40. It's like 22, 23 up to 37 in a matter of 3 days. So if this thing was to run back to 40, 39.08 was the high. Say it runs back to 39. These little $20 calls are going to be worth 19 bucks a piece. Just two contracts is 3,800 bucks. On top of the 800, I have $4,600 on a $46,000. No, 4,600. Is that right? Is my calculator working? They're worth 19 bucks a piece. Well, they'd be worth 20, so that's $4,000. So I'd have $4,800. Yeah, it'd be about a 50% rate of return. And I was only in I was in most of it for 45 minutes. 50% rate of return when you only have 20% left in the deal is killer. You'd have a double, but I'll take 50% with virtually no risk, very little risk. Because one thing you figure out after a while in this business is that if all you focus on is a profit potential, then eventually you're going to get skewered. If you will focus on the risk and manage your risk, you'll get those home runs once in a while. You're going to get singles and doubles. But one of the main keys is focusing on managing your risk and getting your risk to the lowest possible level as quickly as possible is the best thing you can do. And then manage it as best you can from there. And the biggest thing, like I've been harping on the last few weeks, I already said it. I'll say it again. I'll keep saying it. Is the question becomes, what are you comfortable with? And, that should be a question that's constantly going through your head on every single trade that you're doing. If you're not comfortable in your trade, then adjust it so you can answer that question, yes. So you can say, yes, I'm comfortable here. I could lose $1,000. I could lose $100. I could lose 10 grand. I'm comfortable with that. If you're not, again, adjust the size. So let's see where some of these are at. Curious where we're at. We might not. Oh, we're upside down now. It's okay. Banked like 25 grand last week and a half. So we've got some, what is that? Oh, Uber. That's why Uber went against us. That was profitable yesterday by 3 grand or something. And Etsy also gapped up for some reason. That was another one. Yeah, this was profitable yesterday, and I have 2 stops. I wonder why that one didn't hit. It did hit. It just hasn't cleared it out yet. That's weird. Yeah, this number, open equities negative 3 grand. This was last week or earlier this week. It was a positive 50 grand. And this was 1,087,000, I think. So we've banked 24, 25 grand. But, most of the trades got stopped out the other day when the market popped up because was in bear. Almost all the trades were bearish except for one, I think. And so, yeah, but that's the weekly whispers. We're up over 100% so far this year. That's what I use this for right here. Adobe got hit. Didn't they have earnings? I think I remember hearing about that this morning. There's Schwab. This is one I like. Let's take a look at Adobe, actually. I think they had earnings, didn't they? Yeah. Remember hearing that. Where is it? I know I have it on my list here. Yeah, there it is. Yeah, they're getting hammered. Which earnings we know is coming, right? So you can protect against that. Well, there's where a fun one comes in. I tried to do it on AI. Kind of sort of did a little bit, but you do the Grand Slam play. When you know earnings is coming, you can have fun with this. So, but yeah, they're getting hammered because of earnings. I think they beat, but then they came out and said things are looking sketchy. The next quarter is probably not going to be that great. Let's see. We just got a couple minutes left. If you have any other questions or you have anything else to look at real quick, let me know. Merley. Yeah, okay, that's what I thought I heard. Yeah, Adobe beat top and bottom, but they had lower expectations, which is usually why they get hit like that. Because the market doesn't care. People get so confused. When they beat their earnings, how come they're getting hammered? Because the market doesn't care what you did for them last quarter. They want to know what you're going to do next quarter. Market looks out 6 to 9 months. Doesn't look backwards. So when they come out and say, "Oh yeah, we smoked our earnings," so what have you done for me lately? What are you going to do for me next quarter? Oh, you're going to be terrible? We're going to kill you. We're going to get rid of you. See ya. We're out. City. I don't know what this is. Cart. Maple Bear. I'm assuming it's some kind of tech company. It's not with that kind of cheesy name. It's kind of a cool name, actually, but it sounds like some kind of tech nerdy name, something that a nerd came up with. Apologies if you're a nerd, but I'm about a quarter of a nerd. That's about it. Chipotle, Coupang, that's going the opposite. EOG, dang it, missed that this morning. It's a nice little bounce. But there's a funny thing is, even though I may have missed it because the entry point, you can see there's 118.63. This thing could easily pull back there and do it again. So one little day does not necessarily mean much. You got me beat then. 50% nerd. Yeah, if you go to Comic-Con, that's all out nerd. All out nerd if you're going to a Comic-Con. Norrisom's in the head and shoulder Lily. Ooh, that's looking kind of good. Ooh, where's that actually at? 931. That's right at the entry point. You know what? I'm gonna go pull the trigger. Just so you guys can see what I do in the weekly whispers. This is what I do, right? So we traded this last week. Lily got hit on here's we're at a resistance. It's just dancing up here. And all these bearish candles, you got huge attempts by the bulls to run this thing higher, and they fail every time. There's 4. So I put an order out there that said if it hits 931.75, short it. Or buy puts if I was buying options. This system really only works for stocks. So you can't really do options trades. Otherwise, I would. I would love to be able to do that. So we ended up buying it here. That day, I moved the stop down to about break-even point. The next day, I'd moved it down even more. And it ended up stopping us out here at I think 918. It was an $18 or a $20 profit. But it's right at the entry point again. So I'm going to get back into this thing. We're going to sell 100 shares a little short. I'm going to do it at the market because it's basically right there anyway. It's a few pennies below, but if I wasn't going to, I'd put it stop at or below or above, whatever it was. But we're just going to hit submit, and then I can do a journal, can hit OK. I'm just going to call this a double top. That's kind of sort of what it is, even though it's an aggressive place to enter a double top. It's not technically a double top yet, but You can make notes in here. Swinging again. It's an entry point. And then I always do this attached chart image. So what that does, you hit OK, you come in here into the journals. So there's some stops I got hit on. Oh, UPS triggered an entry point. Oh, interesting. Okay, I know. The auto orders don't capture the image, but the ones you do manually, you can come in, so you can click image, and what it does is it takes a snapshot. You can see it looks just like I have it. So whatever you have on your chart, it'll take a snapshot of it. So it's a great way to be able to journal. You can come in here and go back through your stuff if you want to, but so now we're in where to go. So there it is right up here. It's in, we're short 100 shares. There's our entry point, 930.85. So it's a little bit worse than the entry, but it's 90 cents on a $900 stock is nothing. So hopefully Lily will keep going down. And then we'll just go put a stop. In fact, we'll just do that now. So I always make it a GTC. The guy at the developers said to do that because the day order sometimes will trigger right away. We'll stop at above 975.40. And it'll tell you down here, you can set up multiple accounts. I got the pattern of the week account as well. But it tells you what you're at, what you're going to do. Going to exit from the short at 975.40. Hit submit. Now you got the journal. Should be an initial stop. I just want capital preservation, preserving capital. It's an exit. Take a snapshot of that, and boom, I'm done. Now I just let it play out. Just let it do its thing. Just on autopilot. Except if it drops, say it drops a bunch again, if it gets back down in here to this 900 or anywhere below that, I'll just adjust that. And I've got a line here. I'll go put a line like this, and I'll just drag it down and say, okay, well, this is essentially what I did back there is that I went, okay, I'll go above the high of this day right here. So I'd put the stop right there, and if it would have triggered, it triggered. I'll just move the stop and then say it moves down more. I can grab this down, and then I'll go up here and just change my stop to whatever this number is, and just trail it down essentially. So what was that all about? Already did, Karen. There's actually the one in the beginning, the hidden charts, the hidden gems of the chart, I think it is. There's a whole training class. I've got a whole training thing on how to use Omega charts. And we just did it Wednesday night. I mean, it's a pre-recorded deal. There's like 6 hours of video on there that I did where I went through how to use Omega charts to do all this stuff. There's another one coming up. Where was that? That was on the September 19th, right there. Or you can just go get it. That's a preview into what, I mean, it's a preview of the tool that I created, which is training how to use Omega charts, which your comment is exactly why we did that, because there's a lot in here, right? If you're not familiar with it, if you haven't used it very much, there's a ton in here. So I literally just sat down. Here's the different sections, the different pieces you can use. And I split it up into different pieces, did a training on how to use it, how I use it. There's a lot of little nuggets in there too, as far as trading stuff too, because you can tell I don't necessarily stick exactly to the topic all the time. Sometimes find little squirrels here and there. So I throw in some stuff about trading as well. So there's good nuggets in there on top of learning how to use Omega charts. So, all right, Brenda, I got time to look at Apple real quick, but that's about it. This is one that is on my list. It's the beginnings of a Head and Shoulders. It's a little bit hard to see with that. We go out here, I might be able to see it. It's not pretty right now because this right shoulder is really gross. There's a little tiny left shoulder, a big head. If it rolls over from here, and that's an if right now, then we would have a right shoulder. It's still ugly. I don't like the looks of it that much, but I'm looking at this thing, looking at bearish below this 221 area. If it does, but who knows? It's at 223.97 right now. Actually, that's about where it's at because we do have, this is streaming. It's just not real time. It's about 15 minutes delayed. You can see here it's 9:51. That tells me that I need to shut up and let Andrew get out of here. Yeah, or I mean, you can just go buy the training too if you know you need the training, you want it, then you can do that. I don't know if it's recorded or not, quite frankly. It's probably not, because I don't think the free promos, I don't think they record, but maybe it is. I'd have to check. I don't know if Andrew can look real quick or not, if he can confirm or deny. But I don't get too involved in the back end of things. I prefer I just stick to my trade and my coaching side. So I don't know all the inner workings of how it goes on the back. It's not recorded. That's what I suspected. Thank you, Jennifer. That's what I figured. Usually the free promos aren't. So, but you can go look. There's call the support team or get on the site. There should be somewhere on the site that it has the tool itself that you can. It's available for purchase, so you can get the 6 hours of training on it. So. Are you talking about this one, Tej? This class is being recorded. I don't think the promos though, where we're promoting or we're showing a new product or a product that's existing, I don't know if they record those or not. Yeah, but this one's definitely being recorded. So, because they'll put this up on YouTube. So it's gonna be longer than an hour, which is not supposed to be. I find squirrels. Who brought up the squirrel thing earlier? That was awesome. I like that. Steve. Squirrel market. Any questions real quick? Because we do need to wrap up. So, but yeah, if you're using Omega charts and you want to learn how to use it better, then go get that. Go get the training tool. Oh no, you're good, Jennifer. No, this one, yeah, the training coaches playbook's always recorded. So, because yeah, they'll post it on Facebook. I think they do it in about a week. So if you have friends that, well, invite them to the training coaches playbook, or you can always send the YouTube link to them and they can watch us sit here and ramble. Yeah, Boeing's on strike. I just saw that this morning. I didn't know that. That's local. Where are they at? That's not updated yet. Are they getting hammered? Oh, it's not that bad. Lots of volume though. Yeah, I just saw it on the headline news this morning on CNBC. Phil LeBeau is up here somewhere. They're up in Everett or something like that, because that's where one of their big factories are. So a lot of Boeing employees around here. But yeah, that's not a surprise. It'll probably come back to about 120, I'm guessing. That's the next that's the next major level. Who knows from there? So of course, that's the tricky part. If you trade this to the downside and they all of a sudden come out with a deal, that could change the direction of it. So the news type of plays can get tricky. So you gotta be aware of that and be cautious of it. So all right, we're gonna call it a day. Thanks for coming out, having some fun, giving me some good laughs today. So I appreciate that. So y'all have a great weekend. You're welcome. Thank you. And watch out for Jerome Powell next week. He's coming out Wednesday, even though I don't think it's going to matter. Honestly, I think even if he cuts a quarter, I think even if he cuts a half, the market's still going to head south, is my opinion. But it's already baked in the cake. The market's already expecting it. The market's expecting it at 25-point basis cut. And actually, I think if he cuts a half, it'd probably spook the market, is what I think. But it's hard to say how the market's going to react. So we never know. Just be prepared. Let's put it that way. All right, y'all take care. God bless. Bye-bye.